Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only, and quickly becoming very popular, Mr. Dan Bird. How you doing, sir?
Doing pretty well. How are you?
I'm doing well. Well, another rough week in the stock market. The week kind of unfolded as you shared with us. We got to the end of the week. We got the jobs number, which was kind of a Goldilocks number. Kind of
Right.
the
Yep.
porridge was just right. I thought it was
Yep.
interesting how the market reacted early, and then boy, did we sell off in the afternoon. So a couple of things. Talk to us about last week. Talk to us about next week, and then we'll get into how confident are you feeling about that bottom call of June. So take it away.
Yeah. One of your listeners actually sent me a note, said, what would it take for you to change your mind on the June bottom?
I love my audience that they pay attention and are engaged in this. Thank you.
Yeah,
Whoever sent that, thank you, thank you, thank you.
I don't get a lot of notes from them, but sometimes the ones that I get are insightful and actually, give me things to think about as well.
Very cool.
But it's a really good question. I mean, it's an excellent question because you should also, one of the things I put in my newsletter, because I basically structured my newsletter this week around that topic.
Yeah, I thought it was. By the way, if you're not getting the newsletter, show it. I read it this week, and it was a great question. And I loved how you answered it. You self-reflect every week, so I thought that was pretty cool.
Yeah, you really have to. There's the newsletter. Just send me an email at breakpointtrading@gmail.com, and I'll add you to the list. And I'll send you this past week's newsletter, and then you'll get them each week. These are some excerpts from this week's. I put cartoons in each week. By the way, do you know what these things mean? TFD?
Yeah, buy the effing dip and short the effing rip.
No, sell.
Oh,
Sell, or you could say short too. Yeah.
Yeah, same thing. Short, sell. Yeah.
Short the effing rip.
Yeah, rip.
Yeah. I actually found this little cartoon that had these blank up here, so I could put anything I wanted to in it.
Yeah. Yeah.
I might use that again sometime.
There you go.
Yeah. One thing that I thought was interesting from Investors Business Daily is that they're still saying uptrend under pressure.
Yeah, I saw that. And I wanted to ask you. That was weird.
Yeah, they're not saying downtrend in place.
And again, I think the Nasdaq has been down 6 days in a row. I think this was this.
Yeah, we'll look at it. It's not pretty.
Yeah.
Interestingly, on this emotional market cycle, this is from VectorVest, so it uses their parameters. So they've got a market timing indicator that is on a scale of 0 to 2. So anything above 1 means the market's going up. Anything below 1 means it's going down. When it gets to 1.6, that's way up there, and that's the time when the market typically starts to roll over.
Okay.
And I think we got to 1.68.
Ooh.
This last one before it started rolling over.
Okay.
And when it gets down here to 0.6, that's when it's starting to look for a bottom. And we are at 0.68 right now.
Oh, interesting.
So we're very close. I'm going to talk about this today as well. We're very close, I think, to a bottom, but that doesn't mean it can't keep going lower.
Right.
And we'll discuss that. All right, hang on. So here's the economic meetings.
Kind of a look back to last week.
This is a look back on last week. So consumer confidence came in higher. The job openings came in higher. Those are positive. Non-farm payrolls, this is the ADP number, came in at 132. So that was, the consensus was 300. So that came in lower, which is actually what the Fed is looking for.
Yep.
Right. Crude inventories came in higher.
Okay.
So that means oil might still keep going up. Oil and energy had a volatile week.
Yeah, it did.
Oil went up and then it went down. I mean, it's a good example this past week with oil. It's a good example why it's not included in core CPI.
Yeah. No. Yes. Right. Not including core. Correct. Yes.
Right. And then initial jobs claims 232. Manufacturing PMI 52. Anything above 50 is positive.
Yep.
That came in a little bit better. And then the non-farm payrolls. Now it says here forecast was 300, but the forecast was actually 318.
Well, it moved a lot because I've been watching this for a while. It had started as low as 290. It had moved up.
Yeah, that morning Friday morning, it was 318.
Correct.
Came in at 315.
Yeah.
So almost exactly. So we sort of had a bifurcated market on Friday.
Mm-hmm.
It was sort of a little bit schizophrenic.
Hmm.
So I think in the morning it opened up and it saw that this number was pretty close to consensus.
Yep.
It didn't blow it out like it did the month before.
Yeah.
Which is saying, well, maybe the Fed won't be as hawkish.
Of course.
And I think the afternoon, everybody started looking at the second one.
Correct.
The unemployment rate, which went from 3.5 to 3.7.
Yeah, and something you reminded of us on, and actually I called it that Friday morning when the number came out, is I said, remember what Dan told us. Recessions start after the unemployment rate bottomed.
Yeah, after it starts rising.
Yeah, exactly. Yeah.
After it bottoms and it starts rising, usually 3 to 4 months after it starts to climb is when the recession happens.
Yeah. So I reminded my audience of your excellent history lesson.
Yeah. Now this is interestingly, it's maybe counterintuitive, but this actually is a good number too for the Fed.
Oh, it's absolutely there's no ambiguity. The Fed has told us without telling us that we're going to have millions and millions of unemployed people. We're going higher. I suspect we're going to be between 6 and 7% by the summer of next year.
Really?
Yeah, this is going up.
So the Fed has a dual mandate.
It does.
Inflation and employment.
Stable prices and full employment.
Yeah. So inflation and employment. They don't want no inflation. They want some inflation.
Yes.
Right. So they want 2%.
And
they want, employment in the sense that they want people to be able to find jobs if they want them.
Correct.
So if this starts going up, then the Fed is saying, oh, good, our job is working. And especially if this payroll starts going down. Now, there's still a lot of strength here. So there's
no
still
question.
a lot of job openings.
Yeah. I mean, look at the JOLTS number on Monday.
You can look at the JOLTS number up here.
Yeah.
I mean, it actually went up.
Yep, it did.
Right. Up from last month even. So there's still a lot of job openings out there.
The other thing that's not on this list that was important from payrolls is a third number, which was wages. Wages were 0.3%, 5.2 annualized. That's going to be core. That's why core is going to be sticky. And that's where the real work is. So lots of work ahead for the Fed.
Yeah. So let's play this out. So if, as you say, you think this is going to be 6% by next summer.
Summer. Yep.
As this continues higher, and if this one comes down a little bit,
it will.
We need about 150,000 a month.
Yeah,
to have stable employment.
Yeah, exactly.
Then the Fed is going to start thinking, well, our job is done, right?
I see. No, you're missing the comma. Wages, all of that. So when people ask me all the time, Michael, come on, you can't have rising employment and rising wages. I'm like, who said you can't? How does that? Well, sure you can. Absolutely you can. And I think that's what's going to happen.
I mean, look at the JOLTS number. I mean,
exactly.
Job openings is the key. Yes, you can absolutely have rising
unemployment
jobs
and rising wages
if there's job openings.
Yeah, what we will see is industries shed resources, and they will have to find or skill up in other industries.
Right. We're going to talk about that in the second session. Talk about industries.
Yeah.
But what my point here is, as this unemployment rate starts rising, and if this starts to get to, let's say it gets to 4.5.
I don't think I think I know where you're walking me. The Fed does not flinch until it's at least 5.5.
I disagree with that.
Awesome. I love disagreeing.
I think if the Fed sees inflation, and we've got an inflation report coming on the 13th.
We do. And headline, and let me just cut you off. Headline will be lower. Core, maybe not.
Yeah. My suggestion to those that are traders out there is don't be long going into that number.
No, be flat. I mean, don't be a hero.
Do not anticipate.
Don't be a hero.
Yeah, don't anticipate. Wait to see the number and then see the reaction to the number. I mean, we got a good example of that on Friday.
Right.
And actually, well, let's look at next week's. Next week's kind of light, got a holiday. So we can't lose any money on Monday.
Yay!
Fed Chair Powell speaks. This is on Thursday.
Yeah, that was when I looked at the week. That's the one thing I highlighted this morning. I said, really, the only thing that can move the market is Powell speaking, because to my best of my knowledge, I don't think he has spoken since he kicked the market in the nuts on last Friday.
He hasn't. So it's going to be interesting to see if he continues with that hawkish tone.
Yeah.
Or if he tries to moderate a little bit as the market is.
I hope he doesn't. I hope he doesn't. But yes, that'll be a question. Yeah.
This is Stock Traders Almanac. You can see historically, last 75 years, the month of September. If we just stay true to the average,
to trend,
then we're going to probably be lower at the end of the month.
Okay.
Right. And then the sectors for last week.
Yeah, these are not the sectors you want to see leading if you're a bull.
Right.
Utilities, number one, that's not good. And
communications,
negative.
Communications, you do want to see. That's things like Facebook and
Snap.
But you don't want to see. You don't want to see.
You know why
staples.
that's up? That's because of Snap laying off 20% of people.
Right.
That's why Snap was up, because they whacked 20%.
Yeah, but this is a good example of what I meant by schizophrenic week.
Yeah.
You got utilities, which is a
ultra
defensive, leading.
Yeah.
But you have energy that normally was up there too. Energy is actually underperforming.
That's shocking when you think of.
And you've got discretionary, which is usually an aggressive sector that you would think if the market's going down like it did, would be underperforming. Actually overperforming. It's still negative. Everything was negative.
Everything was negative last week. Yeah.
It's just this in relation to the S&P.
Yeah, look at stock technology. Woo, 5%.
Technology is all the way at the bottom. We're going to talk about that in the next section.
Wow.
And then this is a close-up view of the coming month, September. So we are right here, Labor Day. This is next week.
Kind of a flat week.
Slightly down, flat, slightly down. I think we're due for a bounce right now. So we may get it right in through here. And then the week after that, kind of takes off. Everybody's going to be feeling okay. It's over. We're back to the highs.
Yeah.
And then the rest of the month just craters.
Yeah. Well, yeah. This is going to be interesting. The 13th is a big day.
13th is a big day with CPI.
Yeah, and then we got the 21st.
And then the 16th is
triple witching. Yeah, that's right. Yeah.
For options expiration. So yeah, the September is not a good month in general.
Damn it, I'm staying in cash still, man. Geez, so boring.
I think that I'm in cash too, pretty much. I have a couple of small biotechs that I'm watching, but everything has tight stops right now. So I could easily get stopped out very quickly. Very, very low loss. So this is the action on Friday. This is Schizophrenic Friday.
Okay.
All right, Friday is, you can see down here.
Yeah.
September 2nd.
Yep.
September 2nd. You can see the market started to climb Thursday.
Yeah.
In anticipation of the jobs number.
Yep.
Interestingly, it went down here and twice hit this 3905 level. We'll talk about the importance of that level here in a second. Okay. Part of my thesis for what would make me change my bottom call.
Okay.
For June. So we went down and we hit it twice, and then we took off on Thursday, continued going up for the first until 11 on Friday, and then went sideways. So interestingly, the PPO, this is a momentum indicator up here. You know, right here at 11 o'clock, it crossed and started down. So there was a sell signal there. Market went sideways until noon. And then down here, the ADX, which shows you the buys versus the sells. You can see the sells crossed over the buys.
Do you think a lot of that was just traders wanting to get flat heading into the weekend?
I do. I said that in the newsletter too. And yeah, I think everybody didn't want to go into a long weekend.
Yeah.
Not knowing what's going to happen, especially after this week finished. So yeah, I think a lot of them were just trying to get out here at the end. But interestingly, it came down at the end of the day, almost with, you know, only 15 minutes left to spare. This is a 5-minute chart. So 15 minutes before the close, came down and hit. Look at where it hit.
3905. Okay.
3905.
And where did we end at? 39.
We ended at 3924.
Okay. All right.
So
tell us why 3900 is important and why it could go either way.
Question. Yep. So that leads us to the next ones.
Okay.
Now, this next one is this panel right in through here. This is the put call ratio.
Okay.
The equity only put call ratio. So, and I reverse them. So it stays, you don't have to mentally try to, figure out the other side.
Got it.
Normally when this is high, when this goes up, the market goes down.
Okay.
When this goes down, the market goes up.
Got it.
Same with the VIX.
Oh, okay.
When the VIX goes up, the market goes down. But these are normally showed the other way. What I did was I just put a negative sign in front of the symbol, and it flips the chart around, so it shows it to you the other way. So now intuitively, it's easier to understand.
Makes sense. Yeah, you don't mentally have gymnastics.
So now you look at puts. These are everybody's buying puts.
Yeah. So market's
the put
going
call
down.
ratio. Everyone's buying puts because the market's going down. You can see here we hit the 200-day almost perfectly.
Yeah.
And started selling off. This is even before the Fed meeting. Fed meeting is this big long red one right here.
Okay.
So that's before Powell's speech. So we hit the 200 almost exactly.
Yeah.
And started going down again. I talked about in my newsletter last week how important the 200-day moving average is.
You did. Yeah, it was very well done.
All right. So it started going down. And it dropped below the 8-day moving average right here. That's why I put this red line here.
Okay.
So put call ratio, instead of everybody's buying calls, they start buying puts. Normally when it gets below 75 is usually the time when the market bottoms.
Okay.
So you can see right here, it got really low right here. That's about 7, that's probably 85 right here. This is the June bottom.
Got it.
So there's the June bottom. It got way down here. It started moving back up, and this started to rally.
Okay.
All right. Over here, it got down here. It started to rally. These didn't go down as dramatically, but you can see whenever this goes down and starts back up again, the market rallies. Those are these green lines.
Got it.
And when it gets near the top and rolls over, starts going down, that's when the market starts to sell off.
Okay.
If you follow each of these up, you actually see the points where the market rallies are the green ones, and where the market starts selling off is the red ones.
I like it.
Just correlated to the put call ratio. So right now we're right here. You see it's already dropped below 75. So as soon as this starts moving up, we're probably going to rally.
Okay.
But it hasn't done it yet.
No.
All right. Same with the VIX. I flipped the VIX over as well. Usually the VIX is the opposite.
I think the VIX is the one below, isn't it?
Yeah, the VIX is the one at the bottom. Okay.
All right.
Yeah. So the VIX again, it's kind of correlated to the put call ratio.
Got it.
Put call started going up here. The VIX started going up or going down because this is flipped over.
Right.
The VIX starts going down, showing up because I flipped it over, but VIX is actually going down here.
Yeah, you're just trying to. Yeah, I understand what you're doing.
Right.
Okay.
So I'm just trying to make it comparing to the actual chart.
The visual. Yeah.
Yeah. So we're not there yet, but I think we are close to seeing another rally. But we don't have to. We could just keep going lower.
Market sentiment could be negative for much longer. Yeah, could be.
Right. So here's the VIX, and this time I didn't flip it over. So if the VIX is going up here, the market's going down. So here's the market in this panel.
Yeah.
And here's the VIX, and I marked the bottom right here. And the VIX got way up here over 30. The VIX never actually made it to 30.
Yeah, that's one thing I got to tell you is we're heading into this. There's going to be a day in September where this VIX gets over 30. I just don't know when it's going to be.
I mean, that's going to be capitulation when that happens.
Yeah,
it might be October even.
It could be. I mean, right now, by the dip, I mean, if you're in that camp, you still have a leg to stand on. I think, right? If that, I mean, again, I'm in cash. I'm not calling that as a trading, but by the dip, it works until it doesn't, and so far, they haven't been washed out.
Yeah, the important thing to remember, and I'll show it on the next chart, is we're still in a long-term downtrend.
I agree.
So if you buy the dip, you have to recognize that it's probably
has to be a trade.
It has to be a trade. You're not going to stay in it very long.
Yeah.
We might be getting close to it here soon. Here's the put call ratio again.
Yep.
Over 80 and starting to turn down. So we might be getting close.
Okay.
You can see the VIX actually has started to decline.
Yeah. The other thing that's really interesting, again, I talked to you on Sundays. I talked to Taylor on Mondays. He's a 10-year Wall Street vet. And he actually told me there's a running joke on Wall Street that the adults come home on Tuesday.
Yeah, that's true.
Right. So he says, heading into next week, the kids have been playing the last 2 or 3 weeks. The adults show up Tuesday.
Yep. Volume's going to go up.
Yes,
sure.
Exactly what he was saying. Yeah.
So what does he think the adults are going to do?
Oh, that he doesn't know. But he says there will be a lot more volume and momentum once they decide what they want to do. He wasn't sharing, but he did highlight the early next week, pay attention.
Yeah, I agree with that. This is my trusty.
This was valuable, dude. This thing really was like, damn, it broke trend across the board.
All of these.
All of them.
These are all the sustainability ratios or the rotation ratios.
Yeah, rolling over, baby.
In December, the market went up, and we could see that institutions were rotating out of growth and into defensive.
Mm-hmm.
And then in June, where the bottom was, while the market continued going down and went down dramatically just before June 16th, these did not go down. They started to move sideways or slightly up after this bottom right here.
Yeah.
This is why Tom Bowley called the bottom. He's still sticking with that too.
Well,
and I thought it was interesting that Kramer came out about a week ago and said, I'm calling the bottom June 16th.
Yeah. Jim Cramer's like
Kramer.
the anti call.
Great. After an 18% move, you're now calling the bottom.
Yeah. Congratulations, buddy.
People that watch Kramer, when he called it was right about here.
Yeah.
They're all like, oh, Kramer's calling the bottom. It's time for me to get in.
Well, actually, it looks like everybody's sold, right? They're now using the anti-Kramer.
Yeah, that's right. It could be the Kramer indicator.
Yeah.
So at any rate, these are really important.
I agree. I loved your chart. This caught my attention in your newsletter, folks. If you're not getting the newsletter, you're missing out. This was entertaining. And again, the beauty of this is you can go back on your playlist and look at when you were calling these 3, 4, 5, 6, 8 weeks ago. To see it roll over like this, I was like, ouch.
Yeah. Yeah. Again, it hit the 200-day perfectly. It created this upper trend line when it rolled over.
Yep.
And all I did was I took that same trend line, the same parallel line, and just dragged it down to the bottom here.
Okay.
To see where the bottom of that channel would be.
So 3,900-ish?
3,850.
3,850. Okay.
3,850, right about there. 3,900 is right where we got to. Remember, I showed you that.
Yes.
39.05.
Yeah. Twice.
Three times we hit it.
Yeah, I remember now.
All right. So you can see, so there's the channel. Here's what I'm looking for. Here's what will change my bottom call for June.
All right.
If this goes down and breaks through this bottom channel line.
So just to be clear, if we hit 38.50 and below next week, you're changing your opinion. Close. Okay. Close, not hit. Close. Okay.
Right.
Close.
If we close below 38.50.
Okay. I can
then I would say we're at least going to make a double bottom.
It makes sense.
We're at least going down to the bottom
to test again.
And then we'll have to see if it's to test it and see if it goes back up.
Okay.
At the same time, if this comes down and if it does go through, I want to see these sustainability ratios, these rotation ratios.
Okay.
I want to see if the institutions are starting to rotate back into defensive sectors.
Yeah, they really got out of tech, man. Look at that break.
Oh yeah, tech is the worst one. Right. So this dotted blue line down here is the bottom for these rotational parameters here.
Yeah, I mean tech could be there next
so
week.
back in June, that's where they hit the bottom. They have not been back to revisit it, even though they've broken their trend line. And this one's still above the 50-day. I know it's right at the 50-day. The rest of them are below their 50 days.
Yeah.
But they've all broken the trend line. Tech especially has broken through it.
Yeah, clear as day. Even I can see that one.
Yeah. And the NASDAQ advanced decline line, this shows you the number of advancers versus the number of decliners.
Yeah.
So that one also has broken its trend line.
Okay.
But that doesn't mean that big institutions are rotating back to defensive yet.
Yep.
They are starting to. They're starting to move some back in, but we don't know yet if they're doing that because they're convinced that the market is heading a lot lower.
Right.
or if they're just, they think it's just going to move sideways, or it's going to go down and hit this and bounce back up. And then these will start moving back up again. So these are really important to watch. We can look at these every week. If you want.
I think,
just
I think
it's
going to make sense.
See how they look.
So back to the question that started the day.
Yeah.
What I think the answer is you are watching 38.50. Does it hold, or do we break through it?
That's right.
Okay.
So this is further out. It's a weekly chart.
Mm-hmm.
So again, we can see where it hit the 200-day right up here.
Yes.
Started going down.
Mm-hmm.
I talked about this in the newsletter, and I don't know if people noticed in the newsletter that I actually had links in there.
You do, yes.
If they were interested in learning what these candles are,
mm-hmm.
I actually put the links. So what I said was, I'd like to see this candle reversed over here.
Right.
So this is a shooting star. That's a bearish trend reversal candle.
Okay.
So right there is when I hit the 200-day and couldn't get through it. That's when everybody should have been getting out of this rally. What I want to see over here is for it to go down to 38.50
in river. Okay.
And give me an upside down one of these.
Got it.
Which will be a hammer.
Got it.
So this is a weekly, remember. So this is for the whole week.
Mm-hmm.
Going into Friday, this one here actually did look like an upside down candle. But then the end of the day, Friday, it sold off. So it created a solid candle.
Got it.
But it's right down here in this area where I've been predicting it's going to bounce, or it may bounce.
Yeah, reverse head.
Which would, if it does, it would create a right shoulder if it starts heading back up.
Yeah.
If none of those things happen, if it drops through this and it drops through and it doesn't create a hammer candle right here, it creates another solid one like this, and gets down to this trend line, then I would say we're probably going back to the low at a minimum.
Okay.
And we may actually go all the way down to 3,500 or even 3,200.
Yeah.
All right, because that would take the right shoulder out. This thing would no longer be there.
Right.
That would take out this uptrend line. That would no longer be there.
Yep.
And we just have like open skies below.
Yeah. So folks, this is why you got to go back and watch Dan Bird's playlist. He has a playlist on this channel. He's been doing this week after week after week for us. You can go back and look in real time what we were talking about 2 weeks, 4 weeks, 6, 8 weeks ago. Also his newsletter. If you're not getting it, you should. You'll get last week's and next week's. It is very valuable. I get a lot of great feedback from folks, and his cartoons are hilarious.
Yeah, so this is sort of the same thing. There's the right shoulder. There's a 38.50 line. Again, if we don't bounce there. Now, you can see the momentum indicators are pretty oversold. Doesn't mean they can't get more oversold.
Correct.
And the RSI, the relative strength index, is getting down near 30, which is typically the place where it starts to bounce. Right? So we're getting close. It might not be Tuesday. I expect Tuesday. What I think we might see Tuesday. Yeah. Because the adults are back. Yep. We may see this continue to sell off. Yeah. And it's going to be a dramatic sell off. Okay. And then at the end of the day, it's going to start going back again.
Yeah, for me, again, just a wild ass guess, completely harebrained idea. Somebody who has $0 in the stock market, so why listen? To me, it's going to be about the rotation. I think your other chart, the 5 sectors. I think the adults come into the room and I think they pick winners and losers. Like maybe they say tech is out and that goes lower, but discretion or staples is in. I think that's what the adults are going to do. I think next week by Wednesday, Thursday, because they can't do it all in a day, we're going to find out who they think the winners will be the rest of the year and who will be the losers. That's what I think happens.
Yeah. So keep in mind, one of the things on that Paul Tudor Jones image that I shared last week's newsletter, I now have on my desktop. Yeah. One of the things he says is you have to think the opposite.
Oh, I like it.
So when the adults come back in, they may continue selling. They may actually exacerbate the selling with the idea that they want to buy a lot lower. Maybe. Yeah. They could. And they're going to start buying those technology, those aggressive sectors. We're going to look at that in the next section. Awesome. So the last thing here, this is again from one of your listeners. And if they're watching, they'll probably recognize who they are. But they sent me a note saying, I have a question. I have a 401k. I only have 2 things that I invest in, the S&P 500 and the Dow US completion total stock market. Oh, I didn't even know what that second one was. That's a mutual fund, basically. Okay. It has 3,700 stocks. So you're basically buying the whole market. Got it. It's not every single stock. They take out the low price volatile ones, but it's
Sure.
almost every stock of any consequence in the market.
Mm.
And then the S&P, because sometimes I switch between these.
Yeah.
And it's been working pretty well. He goes, do you have any suggestions on when I should switch or what I should do? And the first thing I said was, I'm not a financial advisor. I can't tell you what to do.
Yeah, exactly. Sorry, can't play.
I don't know what you should do.
No idea.
No, I don't know what your risk tolerance is. I have no idea what your plans are.
Yeah.
But I can show you a chart.
Yeah.
So just out of curiosity, because it seemed to me like these were basically the same thing. The
Yeah,
S&P is,
like if you would have asked me to interpret this chart, that's exactly what I said. They're basically the same thing. One or the other doesn't matter. They're mirrors or not even mirrors.
Right.
They're the same. Yeah.
Right. One's 500 stocks and the other one's 3,700 stocks.
They're the same thing. Yeah.
But they're going to follow the market. So
exactly.
And they're gonna, and I was thinking they would follow each other. So this is a performance chart.
Sure.
So it ranks them starting. This is 2 years ago.
Yeah, they all base on 0. Yeah, I got you.
Yeah, so they start them both at the same spot and then track them over time. And you can see where the Dow sometimes does cross above, outperforms. Sometimes the S&P outperforms. But in general, they basically move almost identically with each other.
Yeah.
Right? Almost identically. Now, interestingly, the Dow one crossed over the S&P one back here in November.
Interesting.
Just as the market was getting ready to start rolling over. The S&P didn't cross until January.
It's actually a pretty large gap today too, just comparatively
And it's a
speaking.
large gap between these two. Yeah, which is interesting.
To me, that means, again, not just a wild ass guess. I think you're going to see they're going to close over the next 2 months. They're going to get closer, just historically speaking.
Well, yeah, they probably will, and they have in the past.
Yeah, they get wide and then they close.
They get wide and then they come back together. So the other thing that I did out of curiosity, using that idea of the 200-day moving average that I talked about last week, is I put each of these. So this is the S&P in red, and this is the Dow in blue.
Yep.
I put each of these in the same time frame with the 200-day moving average. And these red vertical lines is where it crosses, gave a sell signal. And the green vertical line is where it crossed the 200-day and gave a buy signal. Oh. So if you're in your 401k and your 401k gives you the ability to move to cash, not all of them do, but most of them will.
Most of them will.
Move it to a money market fund or something.
Something like that. Yeah.
This is a way that you might be able to play this without doing a lot of trading. Yeah,
you're in and out.
So crosses the 200-day, just move it to cash. Crosses back over, move it back in to either one of these, or take your choice. Yeah. So same thing here. It crossed. You can see up here where these started to decline. Yeah. Cross back over. You can see where they started to move up. And you can see the run you would have between the green line and the tops. Yeah. And then here it was a little different. The Dow crossed before, even on the 200-day down here. The Dow crossed the 200-day first. Yeah. Before the market started rolling over. Interesting. So it looks like the Dow one is actually a better leading indicator of what the market's going to do. That's interesting. Cool. But neither one of them has crossed back above it. No, not yet. So if you did that strategy and went to cash back here in sometime in December, January, still in cash, you would still be in cash. Yeah. Okay. I like it. That's cool. Yeah. Again, not financial advice, but again, those charts look very similar to me. Yeah. Just it was an interesting question. And my first take of it was, why are you even asking? They're the same thing. That's what I thought too. One has 3,700 stocks and one has 500 stocks. But it's the whole market. Yeah, exactly. Cool. Well, do me a favor. Let's close on your newsletter one more time. Sure. Before we get into topic number 2. Again, folks, if you're not getting this newsletter, you're missing out. breakpointtrading@gmail.com. It's something I get each week and consume usually Sunday mornings. Again, breakpointtrading@gmail.com. Dan, thank you very much. You bet.